Good morning, good morning. Thank you guys so much for tuning into another video. Um, Today is December 23, 2024, and it is a Monday of a week where Christmas is on a Wednesday. We also have bank holiday here on Wednesday as well. Um, yeah, no, we don't really have any red photo news. However, excuse me. Excuse me. However, we do have a consumer confidence here at 10 a.m., which I believe used to be a red photo news. But it could be different. I'm not too sure. Um, Coming into the actual charts here, I don't necessarily have a daily bias coming into today. The only thing I can really think of that it's clear that prices could do is to rebalance this daily fair value gap. So I do want to see prices, open up here, open up today, and dig into this daily daily SIBI. I'm not entirely too sure if we end up taking out previous day high, but taking out previous day high would make sense to me. But yeah, I'm a little bit looser here coming into today, not necessarily forcing a bias on the daily time frame. However, on the 4-hour and 8-hour time frame, it's a little bit different though. So if we can get a bullish candle closure here on this 8-hour and the 4-hour candle, I would like to see us continue higher coming into the morning session. So based on how this 4-hour candle closes and this 8-hour candle closes, I would determine if I'm going to be bullish or bearish, at least for the morning objective. We do, however, have these inefficiencies here on the 4-hour time frame, 6-hour time frame, 8-hour time frame, and 10-hour time frame that could be rebalanced, right? We never closed above this swing high here. So this 4 hours fair value gap could be treated as a fair value gap that gets rebalanced. Same thing with this 8-hour fair value gap too, right? So there's 3 candles that creates a fair value gap. There's 1, there's 2, and there's 3. So how I'm able to determine if a fair value gap gets rebalanced or not gets rebalanced, essentially a breakaway gap, is if the third candle here, right? If the third candle closes above the second candle's high, so the second candle's high is here, right? And we did not close above this blue line, which would then mean that I'm going to treat this fair value gap here as a fair value gap that could be rebalanced. And we did end up rebalancing that inefficiency here. We dipped into it just a little bit, and if we expand higher, that's, there's that. But yeah, that would be my morning objective. I'm gonna wait. We have about 23 more minutes or so until the closure of the 4-hour candle and the 8-hour candle. Daily candle, weekly candle, I'm not too convinced what side we're really going to, respect here, just because the way that we're trading right now, so we're trading between a daily fair value gap, right? So this daily SIBI here, and we're still trading between this weekly BISI. So we're kind of in between, two opposing fair value gaps, which I'm not really a fan of, because now we haven't disrespected a fair value gap yet. We haven't yet disrespected this daily SIBI, and we haven't disrespected this weekly BISI. So, while we're trading between those two fair value gaps, I would elect to just sit on the sidelines and, like I said before, go on the lower time frames relative to the daily, and have my bias on there. This week is a rather interesting week though, however, because we are about to close here on the yearly candle. So let's take a look at the yearly candle, right? We had our open here. This is the yearly open. We dipped lower just a little bit, manipulation, and then sorry about that. Let me do a little bit clearer. We had our open, manipulation, expansion higher. So now after we create the open, low, high, right, there's always going to be the closure. And the closure after a really expansive candle, prices tends to retrace back into 20% to 30% of the candle's range and close within that range, which is denoted by this blue box right here. So this blue box is where I'm kind of anticipating prices to close at. So am I anticipating higher prices this week? I mean, we could end up expanding higher, but because, like I said, because we're about to close here on the yearly candle in a couple of days, I'm not anticipating any more expansion, because that would be just inefficient. We should be coming to a close here on this candle, so you know, we could anticipate some sort of consolidation today, consolidation this week. And yeah, I mean, it's reasonable for us to consolidate this week, right? If you just see this yearly candle as a TGIF, right? If you can see, if you apply the same thought process as the weekly TGIF to the yearly TGIF, it's a this is reasonable right here. Still about let's say 20 minutes or so left until 10 o'clock. There were a couple of trades that I took last week, and I'll just go over it while we wait till the 10 o'clock open. So one of the trades that I took last week was on December 19th, 2024, on a Thursday, and it was a daily model, right? And how I approach this trade here is, so based on, this is the weekly candle, right? This is the weekly time frame. So all of these candles here are 1 week. It took 1 week to create these candles. And the idea for this trade was based on this swing low to this swing high, we have created a dealing range, right? So this is the 2-day candles. And we created a dealing range, right? So from within the dealing range, there's a equilibrium level, right? There's half of the dealing range, which is essentially equilibrium. Below equilibrium is discount. Above equilibrium is premium. Prices is always going to be seeking either discount to buy or premium to sell. And if we want to be buyers here in this case, right? Let's think of it through the lens of the market makers. They are always going to want to be buyers below equilibrium. They want to be buyers in discount, right? So with that in mind, the trade that I took on Thursday, or last Thursday, was a short into discount. I know prices likes to trade back into discount, right? I don't know if we're going to actually buy at discount, so I'm not going to put a buy order at discount. But if I know that prices likes has a tendency to trade back into, equilibrium, I'm going to take a short there. So my higher time frame objective here is a retracement into the weekly dealing ranges discount level. With that in mind, now because I have a daily bias here, or I'm sorry, a weekly objective, I'm going on to the daily time frame for my model, right? So my model here on the daily time frame is based on this daily candle. So these are all 4-hour candles, but I have an indicator that shows me the daily time frame. So it kind of just helps me a little bit. But yeah, so the trade that I took here was because of that large range expansion here on Wednesday. On Thursday, I'm anticipating for prices to take out previous day low, right? And to retrace back inside the higher time frames discount level. So on the 4-hour time frame, because I'm taking my model on the daily time frame, I take an entry pattern, or I try to find an entry pattern on a time frame that's relatively low compared to the daily time frame, right? So I go from the weekly order flow onto the daily model onto the 4-hour or 6-hour or 8-hour or 10-hour time frame for some sort of fair value gap. And on the 4-hour time frame, there's a large fair value gap, right? That I'm going to end up using as an entry pattern. So if you guys have ever traded with retail, well, I mean, I guess we're all retail, but if you guys ever traded support and resistance or anything like that, you'll get this idea that you want to, there's this idea that goes around called old support turn resistance. This idea could be applied to ICT concepts, but there must be a reason why not only are we trading back into the previous week's low, right? But we're trading back into the 4-hour inefficiency. So it makes sense for us to be trading up into the previous week's low level. So that's a time where you could view it as old support turn resistance, but there's more to it once you kind of see, once you really look into the details, right? There's that large inefficiency. Prices trades up into the inefficiency. And I do want to talk about my stop loss here too. So this is the 2-day time frame, right? So every single one of these candles took 2 days to create. My stop loss was at the 2-day immediate rebalance, right? So with this large range on this 2-day candle, it appears to me that we could end up creating a 2-day fair value gap. So my idea is that if we're going to create a 2-day fair value gap, we shouldn't have a 2-day immediate rebalance, right? So prices shouldn't trade back into that blue line right there. Let me make it a little bit bigger for you guys. So prices shouldn't trade back into that blue line right there, where I denoted it as 2-day IRB, 2-day immediate rebalance. If we're going to create that 2-day immediate, or if we're going to create that 2-day fair value gap, prices shouldn't trade back up into here. So there's my stop loss, and my target, I kind of already went over it, is the discount level of the weekly dealing range. And we end up accomplishing that. I'm sorry about that. I kept hearing my phone buzz. Turns out it was someone's birthday. wish them happy birthday real quick. Alright, so we do end up basically, you know, moving lower here. The thing about this is I had the idea that we could consolidate too. So backtracking a little bit here, because of that expansion on Wednesday, right? Thursday, I took the trade with the idea that we could end up expanding, continuing lower, right? Or we could have a consolidation. So prices could end up, you know, having that consolidation and creating a daily fair value gap. But what turns out is that it took, you know, basically I was in this trade for throughout the entire day here, and I ended up getting not stopped out, but my brokerage closed the trade on me because I guess regular trading hours closed, and something with the rules saying that you can't trade after regular trading hours or something like that. So I ended up getting closed out in profit, and yeah. But I do want to just show you guys that the trade here continued on. I could have re-entered here too. So this daily candle, right? This is a daily candle. So bearish daily power of 3 suggests that we are going to take out previous day low and expand towards the 2-day low. So because this daily candle is bearish, I can take another model here, and it's going to be an expansion model, because after we take out this daily low, why else should we be continuing lower? There's actually 2 reasons why we should be continuing lower after we take out previous day low. After we take out previous day low, we should take out 2-day low, because the 2-day candle is also suggesting lower prices. So we take out 2-day low, why else should we be continuing higher? Referring back to that weekly discount level, right? That's another reason why prices should be continuing higher here. So here on the 1 hour time frame, you can actually take this entry here on the hourly time frame, because notice how the daily low here, so I noted out 4 hour, 6 hour, 8 hour, 10 hour daily low. That low is the same low across all of those time frames, right? The daily low has the same low as a 4 hour, 6 hour, 8 hour, 10 hour daily. So usually here I would take my model here on the daily time frame. However, because it's the same low as a 4 hour time frame, I can kind of structure my trade out here based on the 4 hour candle. So this concept is like, I wouldn't say that I created it, but it just came to me that it's an idea called scoping, how I call it at least, scope, right? So because the daily and the 4 hour low are the same, I can take my model not on the daily time frame, but I can base it off of the 4 hour, because essentially they're the same candle. And what scoping is once you're able to go onto that lower time frame here, because they're the same low, I'm going on to the 4 hour time frame, I can actually find an entry pattern based on the 4 hour model, not on the daily model, but on the 4 hour model. So it's kind of like, imagine it as binoculars. You're just zooming in onto the targets, right? The 4 hour candle is telling us we should complete this objective here in the next 4 hours, right? Not daily, but 4 hours, because of scope. So now I'm taking my, my model here is on the 4 hour time frame. I'm going to go on to maybe the 1 hour time frame to find some sort of entry pattern, right? And on the hourly time frame, we create a fair value gap. and fair value gaps are my bread and butter. They're my entry pattern. So I would have taken an entry here, targeting the 4-hour low slash daily low, because like I said before, they're the same exact low, right? Take my entry at the 1-hour fair value gap, same targets, daily low, 2-day low, and the retracement back into the weekly dealing ranges discount level. My stop loss is right there, if you guys can see it. So it's at the fair value gap high, in and out. Very simple trade. But the result of this trade here really tested my patience, because, you know, I was originally already targeting that level, right, that discount level, but I just got closed out because of time. And time is it is literally, I believe, like 60% of the reasons, it's like 60% of how I trade. There's time and then price. And yeah, I mean, we didn't consolidate all of Thursday, but I guess we were waiting on the right time here. And, you know, after I got closed out, completely fine with that. That's just something, it happens. And yeah, there's that trade for you guys. And it was textbook, right? You have that higher time frame objective, you go on to a time frame relative to, so let's not make it too subjective here, that's too vague. I went from the weekly order flow, right? Weekly order flow is already suggesting lower prices. We want to retrace back into discount level. I'm now going onto the daily model. Why is the daily candle trading lower? It's a bearish candle. We had FOMC that day. FOMC moved us 1,000 points. Is there now, after that, third step, is there displacement on the lower time frames relative to the daily time frame? So like the 4-hour, 6-hour, there is. I take my entry, bam. Very, very simple. But going back into the actual, live charts here, based on this 8-hour candle and 4-hour candle, the 8-hour time frame here is suggesting that we could end up rebalancing this 8-hour fair value gap again. So as long as we dip into this blue line, or blue box actually, that would be a rebalance. So if we trade up down into here, that's a rebalance. If we trade all the way into past the consequent encroachment, that would be considered a rebalance. But the 8-hour time frame is suggesting that we could continue lower to rebalance the 8-hour fair value gap. 4-hour candle, a little bit vague. Not entirely too sure what this 4-hour candle wants to do. So here, I would actually just sit on the sidelines, to be honest. And if there's no model, then you're just not gonna be a part of it. My phone keeps like buzzing. Buzzing, it's annoying me. But yeah, just pay attention to how we're gonna trade for today. Let's pay attention. Let's see what the 15-minute chart. Wow, it's ugly. So let's see what we have taken out so far. We have taken out Asia lows, Asia's highs, London lows. We've yet to take out London highs, however. So this could be a target here coming into today. But like I said, this morning, I'm not really convinced, if we're going to be, if it's clear, right? I want to be in a trade where it's dumb clear, but here, if we're just going to be like this, then so be it. Yeah, 3 more minutes left. Just take a look at that. But I'm going to go wash my hair. My hair's kind of sticky from this mug. one more minute left until the 10 o'clock open. But are you guys excited? Are you guys hopefully everybody's doing all right this week. You know, we have a pretty exciting week here so far as of like events and stuff. It's Christmas, you know, pretty, well, I mean, I don't really sound that excited, but I would say I'm pretty excited. After we do open up though, just because we don't really have a bias, I'm gonna go into my positives and negatives from last week and just go over some improvements that I can make just to be a better trader, you know, in general. But I would recommend that you guys, you know, actually journal your trades and, you know, look back on it on Sunday or Saturday, you know, just constantly reviewing what you can do better. So here's the open. Let's see here. You know, we have a pretty index, you know, this 4-hour candle here. No, rather it's not really clear what we want. Same, you know, it's not like, it's too subjective here. Like I could say that I would say that's favoring this 4-hour high, but the thing is there's no lower time frame displacement, right? There's not any strength that suggests that we will take out the 4-hour high. So it's just, I'm not confident in taking any of this. And the range here on the daily time frame is actually gnarly. We actually moved 200 points here. Wow, that's actually kind of funny. But yeah, not a really clear bias here until the morning, and like, you don't have to force anything. If there's nothing that you see, you just don't have to take it. Like I've got a lot better at accepting what is here. Like if we're going to be trading like this, back then I would like really force it, you know. But once it comes to you, then it comes to you. Here, if there's nothing that, you know, that you're willing to risk, then you just don't have to take a look at it, which is why I'm going to go on to the pros and cons from last week. Okay, so in every single trade that I took last week, right, there was a higher time frame objective, right? There was a reason why prices should be continuing lower or higher, and based on my model, there was always a fair value gap that aligned with the higher time frame objective, right? This to me meant that I'm getting more consistent. I'm maintaining that consistency, and I'm actually following the rule sets that I created for myself. So having that higher time frame objective, and just requiring that fair value gap, just, you know, it shows me that, you know, I'm really breaking through the, you know, whatever it is that, you know, I'm just know that I'm leveling up here. So consistent models from last week. Second thing is here, just staying patient and calm. So this one actually refers to the trade that I talked to you guys about, right? So here, I know if I took this when I was like, I guess, younger, in my beginning of my journey, I would have been pretty frustrated that I got closed out. You know, right? You know, like my brokerage closed me out whenever, and then my trade ended up panning out on its own. Now I came to realize you just gonna have to accept the results, right? You can't control if your trade is going to close down you or not because of time, right? That's something that you just have to accept. The only thing that you could control is how you react to that, and it just goes hand in hand with the philosophies of a Stoic, right? The things that you can't control shouldn't be on your mind. What should be on your mind, however, are the things that you can control. And The third positive here is for the trade on December 20th. So December 20th on Friday, I was able to find a short model in bullish conditions due to understanding the current objective. So I didn't go over this with you guys, but if you guys took a look at this chart here, right? Currently, it appears to us that we're bullish, right? The story here is telling that, hey, there's this large, busy here, right? Prices should respect it to continue higher, to dig into the OTA level of this dealing range. But notice what I said in my positives and negatives, right? Even though that we were bullish here, I was able to find a short model because I understand the current objectives. So now, if you guys rewind what I just said, 15-20 seconds here, I said that we should rebalance this inefficiency and then continue higher. That first statement, we should rebalance that inefficiency. That's my idea here, right? That's my objective for this trade, at least. If I know prices is going to rebalance this inefficiency, why wouldn't I not find a short model here, right? If I know the current objective being to rebalance this inefficiency, why shouldn't I take advantage of that? Knowing that prices likes to rebalance inefficiencies, I'm going to take a short model into this 2-hour fair value gap that we create here, right? So for this trade, at least, the higher time frame objective is to rebalance this 2-hour fair value gap. After we rebalance the inefficiency, I care not if we respect the fair value gap and continue higher. That's okay. If we continue to dig lower and dig into the consequent encroachment and past that of the 2-hour fair value gap, I will have runners for that. But my objective here, higher time frame objective, is to rebalance the inefficiency. So even though we're bullish, technically, the current objective is for us to continue lower to rebalance a inefficiency. So zooming in here onto the hourly time frame. The hourly time frame here telling us the same thing. Bearish hourly candle, we should take out this hourly low before taking out this hourly high. So I'm going to go on to the even lower time frames here. Hourly candle, 30-minute candle, 15-minute candle. We all have that same low, right? So now the idea of scoping again comes to play. So because the 15-minute low is the same low as the 30-minute and the hourly, I'm actually able to find, I'm actually able to use the 15-minute time frame as my model instead of the hourly, because the 15-minute, 30-minute, and hourly have the same low. So scoping again is essentially telling us, prices is telling us that we should continue, or we should complete that objective here on that time frame, and that time frame is 15 minutes, right? We should complete the objective within the next 15 minutes. So based on the 15-minute model here, you're going to want to go on to, the sub 5-minute time frame. So the 5-minute, 4-minute, 3-minute, 2-minute, and 1-minute for an entry pattern. So I go into the 1-minute time frame. There is a 1-minute fair value gap that supports the idea that we should be continuing lower, right? So I take my entry whenever prices trades back into the 1-minute fair value gap. We end up rebalancing the inefficiency. Here, this is what I'm proud of, right? After we rebalance the 2-hour fair value gap, my objective has been complete, right? That's remember what I said here. My objective here, that current objective right now, is to rebalance the inefficiency. So after we complete the objective, why shouldn't I should move my stops to lower, right? Because the objective has already been completed. Here, this is going to stop you from, a lot of losses, because after the objective has been completed, you should move your stops to break even. And because of the way I had this trade set up, I had my stop loss at the fair value gap high, and I wanted a 1-to-1 ratio here. So my, first TP here would have been at, I don't know what the price level is, but it would have been a 1-for-1. But I ended up getting stopped out at break even. And I believe that I'm not too sure what we really did after this, but I know we reversed here and we respected the 2-hour fair value gap. But this is something I'm really proud of, is that I followed my strategy right. I followed the outline of my trade, so that because after we complete the objective, there's no longer a objective for me. There's no reasons why I should be a part of this trade anymore. So it stops to break even. If we continue lower, so be it. If we continue higher, so be it. But yeah, it just goes to show, you can take short models in bullish conditions. You just have to understand the current objective, and you can't think wishful thinking here, right? You can't wish that we're just going to take out, previous week's low based on this short model. This 1 minute structure here does not align with us taking out previous week's low. There's no correlation here. You can't go from the weekly objective to the 1 minute structure. This makes no sense. So just something that I just want to throw out. And the fourth positive here, following my trade plan and rules, after prices completes a model's objective, I will always move my stops to break even. And some of the negatives here, I kind of disregarded the fact that ES and NQ were trading inversely. So the weekly model, there was a model I took last week where ES was suggesting lower prices on the weekly time frame. However, NQ was suggesting higher prices on the weekly time frame. So they weren't trading in tandem, and I kind of disregarded that idea, and I took, a short on ES. Prices ended up stopping me out, but in the middle of the week or whatever, prices started to align itself with, NQ and ES began to align itself with each other again, and then that's when prices played out. We ended up taking out the weekly low or whatever on ES, but I just have to remind myself that if prices aren't trading in tandem with each other on NQ and ES, I shouldn't be a part of anything. So some of the improvements here for next week, maintaining consistent models, requiring the higher time frame objective, requiring displacement on the entry pattern, or the lower time frames, right? And aligning the time frames correctly. So this is just an example. Weekly order flow, right? I'm going from the weekly order flow onto a daily model. After I establish the daily model, I'm going to go into the 4-hour or 6-hour, 8-hour, 10-hour time frame for some sort of entry pattern. I'm not, however, doing this. Daily model, 1 minute structure, 1 minute entry pattern. There's no correlation unless there's scope. Let's say if something happens or something, like the daily low is the same thing as the 4-hour low, and then the hourly low is the same thing as the 4-hour low, and the 15-minute low is the same as the 1-hour low, then I guess you can go on the 1 minute time frame for an entry pattern. But that, I don't think I've ever experienced that. But yeah, unless there's scoping, you should, follow, you should go from this time frame to this, that time frame to that. Weekly, daily, 4-hour. You can go from 4-hour, hourly, 15-minute, or hourly, 15, 1 minute. But you cannot go from weekly to 1 minute. There's, I wish I had a visual representation of that, but I'll just leave that leave it there for right now. Second improvement here is I shouldn't be in any trades, right, whenever prices are not, or I guess I shouldn't be in any trades when ES and NQ aren't trading in tandem with each other. They should be suggesting the same order flow. ES should be, bullish when NQ is bullish, and I shouldn't be in any conditions when ES is bullish, NQ is bearish. They should be trading in tandem with one another. Third, waiting patiently and allowing the markets to come to me. I don't control the markets, right? I'm simply an observer. So I kind of stated here pretty well here. You don't dictate market movement. However, your strategy and your rules allows you to take advantage of it and turn it into an opportunity. So there's that. But let's take a look at the charts. So going back to the 8-hour time frame. So like I said before, this 8-hour candle suggested, because we didn't close above this fair value gap, the second candle's fair value gap's high, right? So this blue line right here, because we didn't close above this blue line, it's reasonable for us to continue to rebalance this 8-hour fair value gap, and which is exactly what we did. We continue to rebalance this inefficiency. So now that's basically my morning objective. The next interval, I guess, for an objective would be once the 6-hour candle closes, but 6-hour candle closes in about an hour and 45 minutes or so. So I don't really want to stay on. Oh yeah, bye. I don't want to stay on the charts here for another an hour and 45 minutes. So yeah, hopefully. Oh wait, let me choose a stupid quote or actually let me let ChatGPT generate a stoic quote. Daily stoic quote. But yeah, hopefully my breakdown allowed you guys to view prices in a different way. Oh, one thing, because we're, trading lower here, you do want to this is something I do want to point out, is this too. Just watch how we trade here at this 4-hour daily range. So, let me make this a little bit clearer here, but we do have a daily range here on the 4-hour time frame. And just pay attention to how, if we can trade back into the discount level, right? So if we show bearish price action, it's reasonable for us to want to trade back into the discount level. Just watch out for that during, I guess, throughout the day. If we do have a bearish model, my target here would actually be, my higher time frame objective would be the 4-hour daily ranges discount level. Just something that you want to just pay attention to. Yeah. With that, let's finish it off with a daily quote. For today, we have, "He who fears death would do nothing worthy of a man who is alive." So, I would assume that just means that if you fear death, you're not able to fully encapsulate living in the moment and appreciating for what is in front of you, because the only thing that's on your mind is death, right? You're preoccupied with death, but it's a natural thing. It's normal. You can't control that. And let's see what ChatGPT's breakdown is here. "He who fears death," the first part of the quote here is, "Fear of mortality often paralyzes people, preventing them from taking risks or pursuing meaningful endeavors." Second, will never do nothing worthy, right? So living in fear limits your capacity to achieve greatness or act courageously, because the only thing that's on your mind here, if you're fearing death, is that very thought of, oh shoot, you know, like, yeah. But set third here is of a man who is alive. So would never do anything worthy of a man who is alive. True living means embracing mortality, using it as a motivation to make your life count. Underlying that would be the underlying message here is the motivation to make yourself or make your life count. It's something that you can't control. Something that you can control, however, is how you live your life. This quote serves as a reminder to confront fear, particularly the fear of death, and live boldly, pursuing a virtuous and purposeful life. So that's going to be the daily quote for today. And if you guys do want to, join the Discord, join my community, you guys can do so. I do have the link in my YouTube bio, and it's where I post weekly market outlooks there. Sometimes I post daily, a daily bias. So essentially a weekly market outlook, but on the daily time frame. If the daily time frame is clear, right? And we have the discipline. There's a discipline part, a lifestyle part of the Discord where, we share thoughts, and there's also a book talks, so where you can discuss books and stuff, just so not shouting myself out here, but you should check it out. If you don't, then it's okay. It is what it is. I can only control how I advertise it. If people don't come, then they're calling. But here, yeah, that's gonna wrap it up for today. Thank you guys so much for tuning in, and until next time, I will see you guys later.